Imagine waking up one morning, gas is $7 a gallon, food prices jump again, your stocks drop, and suddenly everyone is talking about a recession. The reason is not something happening inside America. It is a war thousands of miles away in the Middle East. Right now, tensions between the United States, Israel, and Iran are escalating, and economists are warning that if this conflict spreads, it could hit the US economy much harder than people expect. Today, we are going to break down exactly how a war in the Middle East could shake the entire American economy. And the answer starts with something the world cannot live without: oil. There is one small waterway that controls a huge part of the global economy. It is called the Strait of Hormuz, and it might be the most important energy route on Earth. About 20% of the world's oil supply moves through this narrow channel every single day. That is roughly 20 million barrels of oil per day, traveling through a space only about 21 miles wide. These oil powers American cars, global airlines, factories, shipping, and electricity systems. Now here is the problem. Iran sits right next to this shipping lane, which means if a war escalates, this critical oil route could be disrupted. Even small disruptions can send energy prices soaring. We are already starting to see the impact. As tensions increased, global oil prices quickly jumped. In recent days, Brent crude climbed above $80 per barrel, one of the highest levels in months. And if the conflict disrupts energy infrastructure or shipping routes, analysts warn prices could rise above $100 per barrel. That matters for one simple reason. When oil prices go up, everything becomes more expensive. Transportation, manufacturing, food, flights. It all gets more costly, and American consumers feel it almost immediately. Let's talk about the price you feel the fastest. Gas. When oil prices rise globally, gasoline prices in the United States usually follow. In fact, fuel markets are already reacting. US diesel prices recently jumped above $4 per gallon, the highest level in almost 2 years. And diesel matters more than most people realize. Diesel powers trucks delivering food, construction equipment, farming machines, shipping, and logistics. When diesel becomes more expensive, everything from groceries to furniture gets more expensive. This is how inflation spreads across the economy. A war far away suddenly makes everyday life more expensive in America. Remember the inflation spike after the pandemic? Energy prices played a huge role. If this war pushes oil higher again, inflation could return much faster than expected. Economists warn that rising fuel costs can quickly feed into customers' prices across the economy. That creates a difficult situation for the Federal Reserve. If inflation rises again, the Fed may have to keep interest rates high, delay rate cuts, or even raise rates again. Higher interest rates slow down the economy. They make mortgages more expensive, they make business loans harder to get, and they can slow job growth. This is how an overseas conflict can start affecting the American housing market, businesses, and jobs. Wars create uncertainty, and markets hate uncertainty. When investors get nervous, they start moving money around. Some industries benefit during conflicts: defense companies, energy companies, oil producers. But many other sectors suffer: travel companies, airlines, manufacturers. If energy costs stay high and inflation returns, the stock market could become much more volatile. Some analysts believe markets have not fully priced in the risks yet. The real impact may take weeks or months to appear. Now here is the scenario economists worry about the most. If the conflict escalates and the Strait of Hormuz is seriously disrupted, remember, about 1/5 of global oil supply travels through that one single route. A prolonged shutdown could cause massive energy shortages, oil prices above $100, rising inflation, slowing economic growth. That combination is known as stagflation. and it is one of the hardest economic problems to fix. But there is one important thing to understand. The global economy is more resilient than people think. Countries hold strategic oil reserves, energy companies can increase production, and supply chains eventually adjust. So a full economic crash is not guaranteed. Risk is real. Because the global economy is deeply connected. A missile strike in the Middle East can change oil prices in London, which changes gas prices in Texas, which changes grocery bills in Ohio. That is how interconnected the world economy really is. And that is why investors, economists, and governments are watching this conflict very closely. Because the next major shock to the US economy might not start in America. It might start thousands of miles away. If you want to understand how money, power, and global events shape your financial future, subscribe to Monetix. Because the biggest economic stories are often the ones most people ignore. And those stories can change everything.